Okay, good evening everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, please give me a thumbs up. If there is no issue, please give me a thumbs up so that we can start with the discussion. Okay, done. So, what we have done today is very simple. We started with the Indian economy. I hope remember what we have started in the morning. So, we started with Indian economy, and in Indian economy, we have seen certain very important concepts, right? And specifically, these are from microeconomics. And we concluded that with questions which have been asked in the UPSC examination, that is Civil Services Preliminary Examination. Now, the next chapter that I'll be taking up, important chapter, the next chapter that I'll be taking up will be the concept of National Income Aggregate, NIA, National Income Aggregate. As usual, what are the things we are going to cover in this chapter? We'll discuss the different types of the aggregates that are calculated. We'll have a look at it, don't worry. The latest GDP methodology, the question on this was asked last year in the UPSC mains examination. Then we'll have a discussion on the concept of per capita income. Then the idea of a pro and counter cyclical growth, vicious and a virtuous cycle of growth. And as usual, after this, we'll take up questions. Okay, now, what are the types of aggregates that we generally use? I'm pretty sure in the newspaper you have come across the first one. Yes or no? In the newspaper you have come across the first one, that is gross domestic product, and that's the most important one. We'll spend a lot of substantial amount of time in this chapter on discussing GDP itself. After this, we'll discuss gross national product. Then we'll discuss a NDP, net domestic product. Then there is a net national product, and finally national income, right? So this is a sequence of the topics I'm going to cover. Let's start with the first one and the most important one here, of course, the concept of gross domestic product. What is the definition of gross domestic product? In a particular country, let's say in India. Okay, in India, what is the market price of all the final goods and services? I'll repeat the statement. In the Indian economy, same way we can calculate for USA also, we can calculate for Japan also, for China also, etc. etc. But the concept is simple here. For a country, for certain time period, what is the market price of all the final goods and services which are produced? That is the definition of gross domestic product. For example, let's take a simple example. Imagine here is a country, and in this country, the final goods and services, remember the term final, you should not include all the goods and services, you should include final goods and services. Now, if you ask me, sir, why should we not include all the goods? Why only final goods? Let me reintroduce your friend. This is the AC remote control. Point number one. Point number two, let's say you will purchase 30 rupee worth of plastic to manufacture this AC remote, and you will manufacture the remote, sell it in the market at 100 rupees. You will manufacture the remote and sell it in the market at 100. Now, if you calculate the cost of the plastic, if you count the cost of the plastic plus the market price of, right, the remote control, don't you think you're counting the cost of the plastic twice? I'll repeat it. You're counting the price. What is the price of the plastic? You're counting it two times. Once when you will include, right, this as a separate one, and second one, when you decide the remote price is 100 rupee, you already have included the cost of the plastic. So you will be counting the plastic two times. That will lead to double counting. And that is the precise reason what we do generally is, whenever you calculate GDP, you do not include intermediary goods, you include only the final goods and services. That is basically the definition of gross domestic product. Any problem with the definition, please do let me know. Any problem with the definition? Definition is very simple. The market price of all the final goods and services that you have produced. Now, please understand the second point here. Second point is that whenever you calculate GDP, whenever you're accounting or calculating GDP, you can calculate it for full financial year. Remember the term now. You can account it, you can calculate it for full financial year. Now, what do you mean by financial year? Financial year will start from the 1st of April. It will start from the 1st of April of this year and will continue till the end of March, 31st March of next year. For example, the current financial year. The current financial year started from 1st of April 2023. And if you are confused, we are in the month of July, by the way, right? So April, May, June, and July. So it has started on the 1st of April 2023 and will continue till 31st March of 2024. Any problem in understanding point number two? Point number two, any problem? So this is the financial year. So we will calculate GDP for full financial year, and this financial year is further divided into 4 quarters. It is further divided into 4 quarters. And when I say quarters here, please understand Sunday evening. Don't imagine another quarter. Focus on the financial year. That is, the time period of 12 months is divided into 4 quarters of 3 months each. 3 months each. What do you mean by 3 months each here? I said the financial year will start in the month of April. So April, May, June. This is the first group. April, May, June. July, August, September, second group. October, November, December, the third group. And finally, January, February, and March. That is the fourth group. I will call this as quarter 1. I'll call this as quarter 2. This I'll refer to as quarter 3. That is a third quarter. And this will be the fourth quarter. Any problem so far? So quarter 1 plus quarter 2, I can call it as half. That is the first half. I'll simply write it as H1. H1 means first half of financial year. And quarter 3, quarter 4, I'll simply write it as second half of the financial year. So now understand this. You can calculate GDP for quarters. Every quarter you can calculate. The data is also published for half a financial year. The data is also published for full financial year. That is basically the concept of gross domestic product. Can I go to the next point here? This is the second point. The financial year, and we'll calculate it for financial year. This is the second point. Third point. How do we calculate GDP? What are the methods which are used for the calculation of GDP? Now, there are 3 methods. Please understand this very carefully. The first method is called as output method or product value method. Second one is called as an income method. And the third one is referred to as expenditure method. Now, please understand, whether I use the number 1, second method, or the third method, what am I measuring? I'm simply measuring what is the market price of all the final goods and services which are produced in India. Be very careful here. We are using 3 methods, no doubt. I'll tell you all the 3 methods. But whether you use the first method, second method, or third method doesn't matter. What are we calculating? We are simply trying to calculate the market price of all the final goods and services which are produced in India. Which are produced in India. That's very important. For example, let me ask you a very simple question after all of this. Let's say this remote is manufactured in USA. Listen to the lecture very carefully. This remote is manufactured in USA. Will it be counted as a part of India's GDP? That is the market price of the remote. Should it be counted as part of India's GDP? Answer is no. Strict no. Why? Whether it is consumed in India, whether it is used in Pakistan, whether it is used in China, doesn't matter. where is the remote manufactured? The place of manufacturing, that country will be considering it as part of its GDP. Let me give you a second argument here. Imagine this remote is manufactured in India and we will export it to USA. I'll repeat the statement. Imagine this remote is manufactured in India and it is exported to USA and it is used in USA. Now, this is a second question to you. Will you count the market price? Will you include the market price of the remote in India's GDP? Should it be part of India's GDP? Answer is yes. Answer is yes. Why? Manufacturing is done in India. So remember this. It's a geographical idea. It's a geographical concept. What do you mean by geographical concept? Is the final good or service, is it manufactured in India? If it is manufactured in India, whether it is consumed outside India, within India, doesn't matter. It will be counted as part of India's GDP only. Done? Now, with that caveat, please have a look at it. There are three methods. One, output or product value method. Second one is the income method. Third one is the expenditure method. What do you mean by output or product value method? We'll simply find out what is the number of, that is the units of final goods and services produced. I'll repeat the statement. We'll find out what is the unit, what is the number of final goods and services which are produced in India. And we'll simply multiply that with the market price. For example, let's take a very simple example. Okay, always simplify the concept. Do not complicate it. Simplify. Imagine in India, only remotes are manufactured. Nothing else. Only this is manufactured. And let's say we have manufactured 50 remote controls. Only remote control, okay? We have manufactured 50 remote controls. And by the way, remote controls, these will be final goods. And if the market price of each of the remote control is 100 rupees, what is the market price of all the final goods and services produced in India? It will be 5,000 rupees. This will be basically the GDP of India. Many of you are asking, right? In earlier concept also, when I took up, right, the idea of right, the plastic, etc., etc. Some of you asked me, sir, what about plastic? How it is going to be accounted, etc., etc. I will show that. Don't worry. None of the intermediary goods will be considered. We'll consider only the final goods. But how do we find out final goods, etc., etc.? I will prove that. Have patience. So first method is clear with all of you. Anybody has a doubt in the first method? Find out how many units of final goods and services we have produced. Multiply that with market prices. That will give you GDP of Indian economy. First method. Second method, slightly technical, income method. Now, please go back to the first session of the day. Did we come across the concept of factor incomes? Let me know. Participate. More you participate, it becomes easier for you to understand. In the first session of the day, we discussed something called as 4 factors of production. And I said, whenever you talk about 4 factors of production, these represent what? These represent inputs. These are nothing but whatever inputs we are using to manufacture a product, produce a good or a service, whatever it is, don't worry. And please tell me, whenever you decide what should be the market price, what should be the price for this remote control, will you not consider what is the total factor cost incurred by the company? Yes or no? Please do let me know. If you're going to calculate, right, what should be the market price of this product, will you not consider what is the total expenditure incurred by the company on land, on labor, on capital, plus your profit? Right? That is basically on the expenditure side. But please tell me now, one of the factors of production is a labor, And the cost, that is the factor cost associated with the labor is what? It is nothing but wages. Same wages, can I call it as factor incomes? Tell me, same wages, can I call it as a factor income as well? So if you are going to manufacture this remote control, let me prove it to you. Understand the concept. Let me prove it to you. You have manufactured this remote control. Let's say for land, the cost was 100 rupees. I'll take simple numbers. Factor cost, by the way. So the factor cost for land was 100 rupees. And next one is a labor. Next one is labor. Assume it was 200 rupees. Third one is capital. That is whatever intermediary goods that you purchased, whatever machinery you have purchased. Let's throw an arbitrary number, 300 rupees. And finally, your profit motive. You should also account for your profit. And let's say you want to earn a profit of 400 rupees. Now, please tell me at what price you will decide to sell it in the market. This remote control, at what price will you decide to sell it in the market? Will you not decide to sell it at 1000 rupees in the market? Yes or no? Any difficulty? Please do let me know. Of course, adjustments are there. Subsidy as a concept is there. I'll introduce that in some time. Taxation is there. Market price, how it is derived, I will tell you. Please don't worry. But you will decide to sell this remote control at 1000 rupees. Now, if I calculate this using this method, can I call this as, if only one remote control is manufactured in India, can I call this as GDP through output method? Any difficulty here? If only one remote control is manufactured and you have decided to sell it at 1000 rupees, can I call this as a GDP through output method? GDP through cost method? Any difficulty? Please do let me know. Right? You are manufacturing only one remote control, nothing else. Simplify it. Only one remote control, final good. That would be how much? 1000 rupee. And because you have produced it, that will be GDP through output method. Now, next method is GDP through income method. GDP through income method. Now, what is the total factor income generated in the Indian economy? You tell me. Total factor incomes generated in India because you have manufactured this remote control. For land, total income generated will be 100 rupees. For labor, total income generated will be 200. For capital, 300. And for profit, 400. Yes or no? Anybody has a difficulty in this? Some of you are giving me a wrong number. Any difficulty, please do let me know. Whatever is the factor cost, the same will be factor income. Morning session. Whatever is the factor cost, the same will be the factor income. Now get the sum total of factor incomes. What is the sum total of factor incomes? 1000 rupee. Can I call this second methodology that I've used GDP through income method? Any problem? Please do let me know right now. Can I call the second one? This, of course, I'm talking about this. The second methodology as the GDP through income method. Because I've counted total factor income generated in India, get the sum total, that is GDP through income method. So this is the second point. And here itself, make an observation and please tell me, is the GDP value under both the methods one and the same or not? Let me know. Is the GDP value under both the methods one and the same or not? In fact, I'll give you one more example to prove value should be same. But please understand, generally we do not use income method. In India, we generally do not use income method. I'll tell you why. In income method, imagine I'm the government representative. I'll come to your home and I will ask you, how much is your total income in the last 1 year? Please tell me how many of you will honestly give me your income number. Let me know. If I come to you, right, I'm a government representative. Many of you will simply tell me, sir, go to the bank and you will get the income data. You're right. I can go to the bank and get the data, how much income you have generated. But don't you think a large number of employees in India do not receive their wages or income directly into the bank account? What about those workers who are working and receiving in the cash payment? What about those transactions where the payment is done by the companies in the form of cash? Have you not seen cash payments being done in India in the form of income only? Of course, yes. So I will come to your home. I'll simply ask you, right? See, this is my ID card. I'm an officer of the government of India. I want to calculate GDP. So please tell me how much is total income that you have generated. None of you, or let's say most of you, rather than saying none of you, most of you will not simply depart with that information. You'll simply say no, sir, because your assumption is that this fellow is from income tax department. And if I give the number to him, they will simply impose and collect a lot of income from me. And that is in the form of taxes. So most of the people will not give the right information to the government. So you tell me, can we use income method? No. Can we use income method in that case? Very difficult. That's the reason production method is used. Income method, not to a very great extent. Okay, that is the second methodology. Third methodology, expenditure method. Third one is called as an expenditure method. Now, I can simplify it here itself, but let me explain, then I'll come back to the same slide again. What is this expenditure method? Let me explain this. Under the expenditure method, what we generally do is, we'll try to find out what is the total amount of expenditure done in India plus all the exports which have been done to the external market. I'll repeat the statement. Because what is GDP? Go to the basics now. What is GDP? GDP simply measures all the final goods and services. Final goods and services which are manufactured in India. Correct? I want to find out what is the market price for all the final goods and services. But don't you think there is one difficulty when you're talking about expenditure? The difficulty is that all the final goods and services which are manufactured in India, what if some of them are exported? I hope you understand. What if some of them are exported? That is point number one. Point number two, if I simply include the total expenditure done by households in India, understand this carefully now. If I include what is the total expenditure done by all the households in India on final goods and services, plus the company's expenditure on final goods and services, plus government expenditure on final goods and services. Please think of it and tell me. Imagine households have spent, let's say, 100 crore rupees. Companies have spent, let's say, 200 crore rupees. And government of India plus state governments, etc., they have spent, let's say, 300 crore rupees on final goods and services. You will get a number that is 600 crore. Do you think this 600 crore is the GDP value for India? Think of it. Do you think that 600 crore rupees, that is a number, it is the GDP value for India? Answer is no. This is not the GDP value. Why? I told you there are two very important points to note here. What are the two important points? No doubt, government, companies, and households have spent money on the goods and services, final goods and services. Does it represent all the final goods which are manufactured in India? No, it doesn't represent. What about those goods and services which are exported from India? Let me know. Which are exported. For example, this is one of the final good. This is exported to USA. Because it is exported to USA, will it be present in the expenditure done by the households? No. Will it be present in the expenditure done by the companies? No. Will it be present in the expenditure done by the government of India plus state governments? Again, the answer is no. Which means in this 600 crores, I should also include the value of exports done from India. Any problem with this? I should also include the value of exports done from India. Any problem? Can I go forward? So I will have to add value of exports. And let's say hypothetical number. Value of exports done from India is 100 crore rupees. Now, if I write 600 plus 100 crore, 700 crore, does it represent GDP of India? Think of it very carefully. The 700 crore rupees, does it represent GDP of India? Again, no, it does not represent GDP. Some of you are saying yes, no. Why? Let's take a household. For example, you. Last year, imagine, or let's say this year itself, you imported a laptop. Is it okay? You imported a laptop and you paid money, or you purchased a laptop which was imported and you paid certain amount of money for laptop. Now, please tell me, if this laptop is imported, no doubt it is already, the value of the laptop is considered as a part of expenditure done by the households. Don't you think by the virtue of importing the laptop should not be included in India's GDP value? Let me know. Because we are importing this laptop, should it be included in India's GDP? Go back to the basics now. Whatever is imported, it is manufactured in out of India, other countries. And by the virtue of being manufactured outside India, it is already counted as a part of their GDP. And because it is not manufactured in India, I should exclude it. Can I give you one more argument here? What if a company has purchased a machine in the market and the machine was imported into India? Not manufactured, it was imported into India. It is already counted as a part of 200 crore rupees. We should exclude the machine value because it was imported. So argument is simple here. I'll go point by point again. We are trying to find out GDP through expenditure method. So what I need to know, how much is the value, that is market price, of all the final goods and services produced in India. But some of these final goods and services which were produced in India have been exported. So I will have to include it. And some of the final goods and services on which money was spent by the households, companies, and government, these are imported. I will have to exclude that value. And let's say hypothetically, that value comes out to be 80 crore rupees. The value of imports is, let's say, 80 crore rupees. Now I will write an equation. Please tell me whether you are able to understand the equation or not. That is, the government expenditure, I will write it as G. Companies expenditure, I'll write it as I. Households consumption expenditure, I will write it as C. So look at the equation now. C plus I plus G. C plus I plus G plus value of exports minus value of imports. C plus I plus G. In fact, technically different names are used. I'll show it, right? Denominations, alphabets are different are used. I'll show it. Don't worry. But please tell me, is this equation okay with you? Total expenditure on final goods and services, which is done by households, by government, by companies. I've taken the sum total. From that, I've extracted the imports, subtracted the imports, and I've added value of exports. What is left out now? All the final goods and services which are produced in India, some of them are exported and remaining are consumed in India. This is nothing but GDP through expenditure method. This is nothing but GDP through expenditure method. So look at the formula here. C plus I plus G, right? I've used the same thing. C plus I plus G. In fact, I said different alphabets are used. For exports, they will represent in the form of alphabet X, and imports they will represent in the form of alphabet M. This is the GDP calculation through expenditure method. C represents our expenditure, consumer expenditure. I represents expenditure done by the companies. G represents right, the expenditure done by the government, all of them on final goods and services. I will add a value of exports, I will subtract value of imports. This is GDP through expenditure method. Now please tell me if you have any doubt in any one of the points that I've discussed so far. I've given you what is the definition of GDP, right? How we calculate GDP, that is financial year, quarter year, right? Let's say half a financial year. Then the three methodologies that we have discussed now, that is income method, expenditure method, and right, the production method. And when you have a doubt, please say what is the doubt. Don't say, sir, I have a doubt. Please type what is your doubt. Okay? Any doubts? Can we go forward? Can we go forward? I'm working in USA based company, but manufacturing of flight parts are done in India. Does parts cost fall under India's GDP? If the final good and service is produced in India, it will be counted as a part of India's GDP itself. Okay. Point one, right? What is point one or methodology one? Whatever is the final goods and services, the quantity, right? Quantity, number of final goods and services produced in India into market price, right? Market price. What if the good is an intermediary? If the good is an intermediary good, we do not count it. In fact, I will show how intermediate goods are removed in the system. I'll show it. Please have patience. Okay, which of the methods are used? The two methods which are very much relevant, which are important for you, and even if you're reading newspapers, you'll come across these two methods. Output method is used in India, and expenditure method is also used in India. But between these two, the most important method is the output or product value method. And the first one is the most important method. In fact, last year the question was asked on this itself. Okay, I'll show it. Very technical in nature. I'll show it. Have patience. Anything else? I'm new for the preparation. Is it necessary to read economy reference book after your class and PPTs? My recommendation is yes. My advice to you people is please read. Why? Right? You will have to consolidate what you have studied today. You will have to consolidate what you have learned in the classroom. And for that, a static source is required. It is needed. Please read it. Embassies of foreign companies. This one question I generally get in every class. I'll tell you why. Somebody would have typed this in the Google somewhere, and they will throw all of this. Now, what is the concept of embassy? What is the idea for embassy? Please understand. Imagine, right? This is USA, and in USA, imagine this is India's embassy. Please understand. This embassy, no doubt, it is present in USA. I hope you understand. No doubt, it is present in USA, but this is considered to be India's territory. It is considered to be India's. And by the virtue of being a part of India, whatever production is done, whatever income is generated, will count it as part of India's GDP. Okay. Okay. What includes company's expenditure? Is it their investment? Of course, yes. You tell me, imagine you're a owner of a company. Think of it and tell me now. You're owner of a company. Now you tell me on what final goods and services will you invest in the market? Think of it. On what final goods and services will you invest in the market? Of course, you will purchase goods, you'll purchase machinery. That is their investment. That is basically the argument. Okay. Okay, done. So let me go forward here. This is basically the concept of the gross domestic product. Sir, paid taxes are added in I and C. My dear, I'll come to that. How taxes are accounted in the calculation of GDP, I'll show that. Have patience. I'll prove that. Don't worry. Now, I told you, in fact, in this method, right, I told you whatever is the GDP value through output method, the same value you will get it through income method. In fact, let me go one step ahead. Let me use the same example. If you remember this example, how many remote controls we had manufactured? Tell me now. How many remote controls we had manufactured? Only one remote control. What was the market price of this remote control? 1000 rupees. Now, if this remote control either is sold outside India or inside India, doesn't matter. Market price still remains 1000 rupees. Yes or no? This remote control, whether I sell it outside India or inside India, I'll still earn 1000 rupees. So tell me, what will be the GDP through expenditure method? Even through expenditure method, GDP will be 1000 rupees or not? Is the logic okay? Right? Even through the GDP, even through the expenditure method, that is GDP through expenditure method, if I sell this remote, how much money will I earn? How much money will be spent in the market on the product? 1000 rupees. So what will be the GDP through expenditure method? Same 1000 rupees. So whether you calculate through output method, whether you calculate through income method, or you calculate through expenditure method, the GDP value, at least technically, should always remain same. Should remain same. But in calculation, in reality, there'll be certain differences. You don't worry about it. But let me prove the same thing again here. I've given a picture here. Please have a look at it. Do not by heart this picture. UPSC is not going to ask you this calculation. But follow the discussion now. What I've done is, many of you are asking, sir, what about plastic? What about intermediary good, etc.? Let me prove it now. Imagine you are the owner of company B. Simple. You are the owner of company B. You are manufacturing this remote control. Now, to manufacture this remote control, let's say hypothetically, you'll purchase plastic. And what is the cost of the plastic? Please go back one step. The cost of the plastic that you have purchased is worth 500. So I'm the owner of company A. I will use the labor. I will produce a plastic and I will sell to you. And the labor that I have used, I'll pay the wages of 100 rupees for the labor, and I want to earn a profit of 400. So automatically I will sell the plastic to you at 500 rupees. That is step number 1. Now the plastic is not a final good. Plastic is an intermediary good. So now what you will do? You will take the plastic, use the plastic, produce a remote control, and you would basically account for the cost of raw material or intermediary good. What was the cost of raw material or intermediary good? 500 rupees. You will also use labor, pay 200 rupees, and you want to earn a profit of 300 rupees. So 500 plus 200 plus 300, you will sell this remote control in the market at 1000 rupees, which will be either exported or consumed in the domestic market. Don't worry. Let's assume it is purchased in the domestic market itself at 1000 rupees. So this is step 2. Done. Step 1 and step 2. Now let's start. Step number 1. I'm sorry. Calculation method 1. What is the first method? Output method. First one is output method. Now you tell me how many final goods and services are produced in the market. Let me know. How many final goods or services have been produced in the market? One final good. One final good. Right. So one final good. And what is the market price of the good? What is the market price? 1000 rupee. So multiply one good into 1000 rupee. What is the GDP through production method? What is the GDP through output method? 1000 rupees. Second method, income method. How many factor incomes are generated? How many factor incomes? In the step 1, 2 factor incomes. In the step 2, 2 more factor incomes. Add all of them. Simply add all of them. That will be the factor incomes in the form of wages. 100 plus 200, that will be 300. And another factor income is profit. 400 plus 300, 700. Get the sum total of both of them. 400 plus 300, 300 plus 700. What is the GDP through income method? What is the GDP through income method? 1,000 rupees. Any problem with the second methodology? Come to the third methodology, expenditure method. How much is the total expenditure done in this example? Look at it and tell me. How much is the total expenditure on final goods and services which are produced in India? Simple, 1,000 rupees. So GDP through the third method will also be 1,000 rupees. Now tell me, if I give a statement like this, GDP value through income method is equal to GDP value through expenditure method is equal to GDP value through production method. Is it okay with all of you? Anybody has a doubt, please do let me know. That is, whatever methodology you're using doesn't matter, right? Whatever methodology you're using doesn't matter. It will simply be equal under all the three methods. How profit can be 700 rupees? My dear, step 1, profit here. Can you see the red marker now? Step 1, profit is 400. Step 2, profit is 300. So 400 plus 300, 700 rupees is the profit. How one country will calculate total value of different products manufactured in territory through output method? I'll come to that. Have patience. That's the reason I'm taking only one product. You're asking me a question, how one country will calculate. Now you please tell me, don't you think if you look at an economy such as India, right? If you look at an economy such as India, only one product is manufactured. Let me know. Do you think only one product is manufactured? No. Lakhs and lakhs of products are manufactured. So imagine if some of you are finding only one product GDP methodology, using only one product, you are finding GDP methodology. You're saying this is very technical, slightly difficult. So now imagine a country such as India, where thousands of companies are there, lakhs of products are manufactured. To what extent the exercise will be complicated? Can you understand that? To what extent the exercise is so complicated, such a humongous exercise, right? That's the reason, simplify it. Do not complicate it, simplify it. Done. So let me go to the next one. Sir, what if I do bargain? If you do the bargain, you will get the printed receipt or not? Let me know. If you do the bargain, will you get the printed receipt or not? Of course, yes. Now, some of you will simply say, sir, if I bargain, rather than 1,000 rupees, right, the price at which I will purchase could be 950 rupees. Some of you will say this, I know. Some of you will simply say, rather than 1,000 rupees, what if I bargain and get it at 950 rupees? Your calculation will be wrong. No, it will not be wrong. Let me prove it. If you purchase it at 950 rupees, please look at the equation and tell me, will anything change in the step 1? Let me know. Will anything change in the step 1? Step 1 I'm talking about. Will anything change in the step 1? No. Will anything change in the step 2 now? Yes. What will happen in the step 2? The profit margin of the company B will become 250 rupees. Simple. The profit margin of the company will become 250. Now calculate all the three methods. Calculate it. Nothing will change. Number will become 950 everywhere. Can I prove it? GDP through production method. How many final good and service? 1. What is the market price after bargaining? 950. So write 950 here. Second method, income method. What is the total wages? It will remain same, 300. What will happen to profit? 400 plus 250, 650. So 300 plus 650, 950. Come to the third, expenditure method. How much is the total expenditure done in this example on final goods and services? Same, 950. Now look at it and tell me, has the GDP value changed? No. It under all the three methods, again you will get the same GDP number. Done. So do not complicate it. Keep it simple. If you're trying to find a loophole in the system, I hope you understand. Bureaucrats like you have made the same system. I hope you understand. Bureaucrats like you will become a bureaucrat in the future. You are the people, you are the experts who actually frame these kind of calculations. So don't you think they would also thought of all of this? Okay, done. So let me go to the methodology now. Some of you are worried about subsidies. Some of you are worried about GST. I will tell you now how taxation is counted, how subsidies are accounted. I will tell you. Listen to the lecture carefully now. The new methodology of calculation was introduced from 2015 in India. Starting 2015, we introduced a new methodology of GDP calculation. And what is this new methodology? Under the production methodology, we have introduced a new calculation system that we'll be discussing now. What are the changes? Point number one, the base year was changed to 2011 and 12. And please look at the statement that I've written here. Please look at the statement. Don't keep on asking questions on the concept of base year now. Simply assume base year is 11 and 12. I will prove what is the importance of base year. But this is a difficulty. If you have followed the discussions starting from 10 o'clock in the morning, we have not discussed the concept of inflation. Yes or no? Anybody in the classroom who says, sir, you have already finished inflation in the morning, please do let me know. I'll be very happy. So I have not discussed inflation. So if you want to understand what is the concept of base year, you should know what is the concept of inflation. So I will cover it, don't worry. But right now, take it as a fact, base year has been changed. What is the importance? How base year is useful? How do we choose a base year? Right? How do we use base year in the calculation of GDP? I'll prove it not today, but in the next class. So point number one. Point number one, the base year earlier was 2004 and 5. Now the base year is 2011 and 12. Point number two, coverage. Are Baba, listen to the lecture, no? Listen to the lecture. Some of you are asking, what was the earlier methodology? Are you not getting the answer to your same question in the discussion here? I am telling you, this is very interesting. Right? That's the reason I said, listen to the lecture carefully. Some of you are asking, what was the old methodology? And the first point that I've written in the classroom or the PPT is, the base year earlier was 2004 and 5. Now it has been changed to 2011 and 12. So am I not telling you what was the earlier methodology, and am I not telling you what is the new methodology? Think of it. Right, so base year earlier was 2004 and 5. Now we have shifted to 2011 and 12. First important change. Second very important change, the coverage has been shifted, right, from ASI to MCA 21. Now what is this? Listen to this very carefully. ASI stands for Annual Survey of Industries. MCA stands for Ministry of Corporate Affairs 21. MCA 21, Ministry of Corporate Affairs 21. Now, what is the basic idea here? Right? Think of it, and I'll ask you a question now. Imagine there are 1 lakh companies in India. Think of it and answer to me now. Imagine there are 1 lakh companies in India. Please tell me, is it possible for the government to go to every company to collect production data? Answer now. Right? Imagine there are 1 lakh companies. In fact, the number of companies is much, much more than this. Is it possible for the government to go to each and every company and ask company one, please tell me what goods you have produced, how much is the market price? They'll go to the second company, right? How many goods, how much is the market price? Do you think that is feasible? Do you think that is even possible? No, that is not possible. If you have 5 companies, 10 companies, 20 companies, yes, you can do that. But in an economy such as India, where, right, huge number of companies are there, don't you think that's not feasible for government of India? So what we do is, generally understand this, what we do is we'll conduct surveys, we'll conduct estimates. That is, earlier we took the data from one survey that was conducted. It was called as Annual Survey of Industries, ASI. We took the production data from ASI and we use that data to calculate GDP. But now, under the new methodology, we are not using ASI data to calculate GDP. We are using the data from MCA21 database. Now, what is this MCA21 database? MCA stands for Ministry of Corporate Affairs. Government of India, that is the Ministry of Corporate Affairs, has launched a portal, website in simple terms. And have a look at this. There are a lot of companies, lakhs of companies, which have been asked. I repeat, there are lakhs of these companies which have been ordered by the government to update what is the production data on monthly basis in the portal. Any difficulty in understanding this? We have identified the companies and we have told the companies this website is there. You are registered. Please keep on updating what is the production data, how many goods you have produced, what is the market price of the good. Please update that data in the website. This is called as MCA 21 database. Any difficulty? What is 21? When this system was launched, it's a e-governance initiative. MCA 21 is a e-governance initiative. Government of India says the database that we have created, the system that we have created should be able to handle whatever is the demand of 21st century. Whatever is the requirement of 21st century, this database should be able to address all of it. That is the reason we have given the name for the database as MCA 21. Can I go forward here? Can I go forward? So the first very important change is base year has been changed. Second, how are we collecting the production data from companies? The methodology also has changed. Third one, earlier we calculated earlier we calculated GDP using the cost price. Now we are calculating GDP using the market price. This is where I'll start introducing more concepts. Earlier, the methodology that we used to calculate GDP, we simply took cost price and calculated GDP. Now, we are not calculating GDP based on the cost price. We are calculating GDP based on the market price. Now, what is this idea of a cost price or factor cost and the market price? Let me explain this. In fact, it is there here, right? Have a look at it, but let me explain. Imagine, again, same, your friend is back. Imagine you're manufacturing this remote control. Now, is it okay if I say, if you want to identify, if you want to find out, right? If you want to find out what is the market price of the remote control, you will start with the cost that you have incurred on the factors of production. Yes or no? Please do let me know. You want to find out what is the market price of the remote control. What is the starting point? You will start with how much expenditure the company has done on the factors of production. Can I call the expenditure on factors of production as factor cost? Any difficulty? Can I call the expenditure incurred on the factors of production as the total factor cost? Another name for this is nothing but cost price. So earlier, please understand this. The GDP value, GDP was calculated by considering only the factor cost for the remote. But under this new methodology, what we will do is, we will take the factor cost. We do not calculate final GDP using factor cost. What we do is, we will move from the factor cost to the market prices. We will include a factor cost, no doubt. But only using factor cost, I do not calculate GDP. I will use a factor cost, then calculate what is the market price or the market cost. Use the market cost to calculate a GDP. But now the question is, how do we derive the market prices using factor cost? How do we derive it? Simple. There are two factors. Let me ask you a very simple question. If government will impose a tax, you have decided you want to sell it at 100 rupees in the market. Follow this carefully. You have decided you want to sell this remote control at 100 rupees in the market. Government will tell you, in addition to 100, I will also impose and collect taxes whenever you sell this remote in the market. Now, is it okay if I say whatever taxes are imposed by the government, it will increase the market prices? Any problem in understanding this? Whatever is the taxes imposed by the government, it will increase the market prices. That is, it will lead to higher market prices. That is very clear to you. If the tax imposed by the government is 10 rupees, so factor cost, let's say 100, taxes of 10 rupees, right? The market price will become 110. If the taxes imposed by the government is, let's say, 25 rupees, from 10 it has become 25, then the market price will become 100 plus 25, 125 rupees. So the taxes imposed and collected by the government will increase the market price. Hence, I've written factor cost plus taxes. But there is one more component here, the subsidies which are given by the government. I will give you an example. I'll prove it. Have patience. What do you mean by subsidy here? What do you mean by subsidy? Subsidy simply means the assistance given by the government, financial assistance given by the government. Right? I'll give you an example. If you're reading the current affairs, if you're reading, let's say, newspapers, please tell me, have you come across a scheme of Government of India, FAME initiative? Please do let me know. Have you come across one of the schemes of Government of India, FAME initiative? What is this FAME? FAME stands for Faster Adoption and Manufacturing of Electric Vehicles. I'll repeat it. Faster adoption and manufacturing of electric vehicles. Under the FAME initiative, right, I'll just take a simple example here. Imagine you're manufacturing an electric scooter. The actual cost of the electric scooter is, let's say, 1 lakh rupees. In fact, it is much, much higher than this. I'm taking simple numbers so that you understand the example. Actual cost of this electric vehicle is, let's say, 1 lakh rupees. Now you will come to the market, you want to sell it to somebody else, and let's say government will impose, hypothetical numbers by the way, let's say government will impose 10% tax on the sale of the electric vehicle. So automatically what will happen to the market price now? Market price will become 1,10,000 rupees. But don't you think paying 1,10,000 rupees for an electric vehicle is very costly in India, where the population is so sensitive in terms of, let's say, market prices, where, right, most of us are worried about how much money I'm going to spend on product A, B, C, etc., where we want to find a cheaper product in the market. For most of us, 1,10,000 rupees is very, very costly. So what government does is, for the electric vehicles, let's say hypothetically, government will announce 8,000 rupee assistance. That is, government says, if you don't get any assistance, what will be the market price? 1,10,000 rupees. But government says, I will give you a subsidy of 8,000 rupees. Please tell me, if government will give the subsidy, what will happen to market price? If the subsidy is higher, will the market price increase or decrease? Let me know. If the subsidies is higher, will the market price increase or decrease? Market price will start decreasing. All of you will agree with me? Market prices will start declining or decreasing. So understand the logic now. The government will calculate GDP, that is market prices, like this. Whatever is the factor cost, plus whatever is the tax imposed by the government, minus whatever is the subsidy given by the government. Whatever is the subsidy given by the government, that will give you the market prices. Is the formula okay with all of you? Anybody has a problem with the formula? Doubt with the formula? Please do let me know. They can remove tax only instead of putting tax, then giving subsidy. My dear, please understand. all the buyers may not get subsidy. All the vehicles may not get the same amount of subsidy. And even if you want to get subsidy, here itself I'll introduce a concept to you. There is a term called as conditional subsidy. And this basically proves that you people are not reading newspapers. I'll prove it to you. You people are not reading newspapers. Why? I'll tell you. Couple of days ago, you can check it later in the Google. Many of you try to cross check me using Google. Couple of days ago, Government of India stated that many of these electric vehicle manufacturers, they have taken the subsidy. They have taken the subsidy, but they have not satisfied whatever conditions are attached with the subsidy. What do you mean by conditions here? Please understand this very carefully. This subsidy that I'm quoting here, that is the FAME subsidy, it is a conditional subsidy. What do you mean by conditional subsidy? Government of India has put a condition saying that whatever inputs you use to manufacture an electric vehicle, I repeat, whatever inputs you use to manufacture an electric vehicle, 50% of the inputs you'll have to purchase it from domestic market. Is the statement okay with all of you? I'll repeat it again. Listen to this very carefully. Whatever inputs you are going to use to manufacture electric vehicles, 50% of the inputs you'll have to purchase it from the domestic market. If you do not purchase 50% from the domestic market, I will not give you subsidy. Very simple. And Government of India now says large number of companies which have taken subsidies, but they have not met the condition, they are violating the conditions under the subsidy scheme. And that's the reason for large number of companies, for many of these companies, Government of India has not given any subsidy for the last couple of months. If you don't trust me, type fame to subsidy in the Google, go to the news, you'll find one of the news articles based on this. Any problem with the term conditional subsidy? Let me know. In later classes, I will use the term conditional subsidy. Don't keep on asking, what do you mean by conditional subsidy? There are conditions. You satisfy the conditions, only then I will give you subsidy. Right? I hope you understand the logic behind this. And I hope I've addressed the question of the students who asked the question, sir, why are they imposing taxes and then giving subsidy? If they simply abolish the tax and abolish subsidy, do you think the companies will be able to meet conditions? The companies will be following all these right guidelines of Government of India? Nothing. Then what is the use of promoting industrialization in the domestic market? That's the argument behind this. Can we go forward? Can we go forward? Done. So understand the logic here. How do we derive the market price? How do we calculate market price? Very simple. The formula is there here also. Start with the factor cost, add taxes, and subtract indirect subsidies. I'm sorry, subtract subsidies given to you. That will give you what is the market price of the product. Earlier, what we used to do is we used to calculate using the cost price or factor cost. Now we are not using it. We are calculating GDP using market prices. And those students were asking me why. Why did we do this? Answer is very simple. United Nations back in 90s, I'll write it here. United Nations back in 1990s introduced a new system. And the name of the new system is SNA, Systems of National Accounts. Systems of National Accounts, SNA. And this system of national accounts recommends that GDP should be calculated using market prices, not cost prices. And majority of the countries around the world are using the same system of SNA to calculate GDP. India did not follow it. Now, post 2015, we are saying we will do the same thing. I hope it is okay with all of you. Right? Why we are using this? I hope it is clear to you people. So, the third very important change that we have introduced is we are using the market price to calculate GDP, not the cost price. And the next one, GVA, gross value addition methodology. Now, before I go to the idea of a gross value addition, any difficulties so far, anybody has a problem, please do let me know so that I can address the question, then go forward with other questions. Any difficulties? Can we go forward? Any difficulties? Freebies are also kind of subsidies? Yes, right? But again, the question is, how do you define freebies? Just try to find out. There is no definition, right, which is accepted by the government as to what is a freebie. There is no definition. What is the name of the portal? The name of the portal is MCA 21, Ministry of Corporate Affairs 21 system. Okay. Was a tax and subsidy not added to GDP before? Again, the same question. Earlier, we calculated using cost price. So if you're using cost price, where is the question of taxation there? Where is the question of subsidies there? No, we did not use market price. We calculate GDP based on cost price. Sir, MCA 21 is now to cover data collection? Yes. Right? You want to find out how many companies are there? How much is the production done by them? How do you get the data? Because you want to calculate GDP. They will report their data to the MCA 21 and we will use that data for calculation of GDP. Okay. As market price is dependent on taxes varies in different countries. How will we compare? That is a criticism. I'll come to that. Don't worry. Right? Subsidies vary from one country to another country. Taxes will vary from one country to another country. That's the reason there are different indicators also. I'll show you different indicators to address all these issues. Don't worry. Okay. Any more difficulties? Anybody else has any difficulty? Please do let me know. Is subsidies only reduced from taxes? No, my dear. Right? Of course, some of the books will give you this formula also. And before you start correcting me, some of the books, what they do is they will take indirect taxes and subsidies like this, and rather than writing two indicators, that is indirect taxes separately and subsidies separately, rather than this they will simply write it as net indirect taxes. Is the logic okay with all of you? I'm sorry, net indirect taxes. Net means the difference between the indirect taxes and subsidies. The difference is written as net indirect taxes. Okay. Okay, if they put wrong data, again, nobody will do that. Don't try to bring deficiencies into the system, because please understand, if you report a wrong data, for example, if you report, right, let's say wrong data, you will have to pay income taxes on the other side. You will have to get your results audited. That is also there. So there are so many checks and balances system. Don't worry, right? Don't try to find loopholes in the system. Okay. For example, imports oil, only the cost of refining the oil, profit of oil is calculated in GDP. My dear, imports and exports, adjustment is done. Yes or no? Imports and exports, adjustment is done. If some product is sold at other country, import taxes of that country will also be included in it. My dear, the import data, that's the reason I keep on telling you, you're trying to find a loophole in the system. RBI will give you what is the value of imports are done in India, what is the value of exports are done from India. The adjustment is done for all of it. Okay, done. Right? Simply, you people, I generally find some people are trying to find a loophole in the system. Right? Don't you think? Right? You people only will become bureaucrats in the future. And just like what you're thinking today, the bureaucrats would have already thought about it and already adjusted for all of it. So don't try to find a loophole in the system. Okay. Okay. So let's go forward now. These are certain very important changes that have been introduced. And the last important change that I'll be discussing will be concept of gross value addition, GVA, gross value addition. Now, what is this idea of a gross value addition? Now, please tell me, do you remember that concept of, right? You remember the concept of value addition? Let me know. Do you remember the concept of value addition? Where did we discuss the concept of value addition? Couple of time ago. I believe in the second session, I told you about the concept of value addition. That is, you will purchase certain products, you will add value, and you will sell it in the market. And I said, whatever is the difference between the output price, that is the final product price that you are selling, and the input price, that is at what price you have purchased the inputs, the gap between that, it is called as value addition. So we are also calculating something by the name of gross value addition. Now you will ask me, sir, why? What is the use of the gross value addition? Let me show a very simple example to you. Let me start with a very simple example. Whenever we calculate GDP, I said we should not be counting the value of intermediary goods. Yes, we should not be counting the value of intermediary goods. What we should be counting is the value of final goods. But now, how will you find out how many of the goods are intermediary goods? Right? The data that you have collected, how many of the goods are intermediary goods, how many are final goods? How will you account for it? This is how the accounting methodology is used. I'll give a very simple example. Imagine there is a company A, right? Let's say Vedanta company, whatever it is. The company A will mine, right? Let's say aluminum ore, right? Or let's say iron ore, sell it to company B. Step one, right? They will sell the ore to company B. Now, company B will purchase the ore, purify the ore, and manufacture steel. And they will sell the steel, right, to another company, let's say C. This is the step two. And now company C will purchase steel, manufacture utensils. Utensils means you can see this here, right? Glass is there, plates are there, steel plates, etc. So the company C will purchase a steel from company B and manufacture utensils, sell it to a buyer in the market. So can I now simply say the utensils are final goods? Any problem here? The utensils are final goods. The company A will submit data to the government, that is MCA 21 data they will submit. Company B will also submit data to the government. Company C will also submit data to the government. Let's say company A says 100 rupee worth of ore they have sold. Company B says 200 rupees worth of steel they have sold. And company C says 500 rupee worth of utensil they have sold. Now, will I get the correct GDP value if I get the sum total of all the three? Tell me, participate and tell me now. Will I get the correct GDP value if I get the sum total of all the three? All the three companies have submitted data. I will take the sum total. Will it give me GDP? No. Why? Those who are saying yes, you are not listening to the lecture carefully. Right? It is not going to give you a correct value of GDP for a very simple reason. When company B says they are selling the steel at 200 rupees, don't you think they have considered raw material cost of 100 rupee? Yes or no? When the company B says they have sold goods worth 200 rupees in the market, they have already considered 100 rupee worth of raw material. So you are counting this raw material, that is iron ore, first here, second again in 200 rupees, third again in 500 rupees. So multiple counting. Same raw material has been counted three times. Is it going to give you an accurate GDP value? No. So what I'll have to do? The best way to adjust for all of this is, if I say, right, have a look at this, understand this carefully. B says B is going to sell 200 rupees worth of goods to company C. Now, is it okay if I subtract the value of raw material? That is, if I subtract 100 rupees from this 200 rupees. Let me know. The company B, company A has not used any raw material. Let me know. Company A has not used any raw material. So company A will sell naturally available iron ore to company B, and the value is how much? 100 rupees. So I will say company A has added a value of 100 rupees. Any problem here? Step number 1. Company A has added a value of 100. Now company B is there. Company B says they have sold goods worth 200 rupees. But that 200 rupees already includes 100 rupees. So what I will do? I will subtract the cost of raw materials. I will subtract the cost of inputs in the form of raw material. So now is it okay? Please tell me now. Company B also has added a value of 100 rupees to the economy. Any problem? Come to the company C. Company C says they have sold 500 rupees worth of utensils in the market. But don't you think out of 500 rupees, they have included steel price of 200 rupees. So what I will do? I will take out the cost of raw materials. What is left out? Company C has added a value of 300 rupees. Any difficulty in the calculation, please do let me know right now. Now can I simply say company A plus company B plus company C totally have added 500 rupees worth of value to the economy. This is the value addition that has been done by all the three companies in the economy. In fact, let me show it in the form of a table. Right? Have a look at it. Whatever explanation I've given here so far, same calculation but with different numbers, it is present here. Much more easier numbers I've given. So company A will sell it to company B at 10 rupees. So no raw materials. So what will be the value addition? What will be the value addition done by company A? 10 rupees. Company B has purchased at 10 rupees. They will sell it to company C at 30 rupees. So what is the value addition done by the company B here? 20 rupees. Company C has purchased it at 30 rupees, sold it in the market at 50 rupees. What is the value addition done by company C? 20 rupees. So in this table, total value addition done by all the three companies will be simply 50 rupees in the market. Can I go forward here? Can I go forward? Any difficulty as to what is the importance of value addition calculation? Now, right, I hope you understand. Now, we are calculating this for one sector or one industry. Can we do the same thing? Can we do the same thing for aluminum industry? Any problem? Can we do the same thing for aluminum industry? Can we do the same thing for, let's say, aeroplane manufacturing sector? Can we adopt the same model in other industries as well? Of course, yes. Of course, the argument is simply yes. Right? So, what we will do is at sectoral level, at every industrial level, we'll simply calculate how much is the value addition. And if I calculate it for the whole Indian economy, can I call it as gross value addition? Let me know. If I calculate for every industry in India and get the sum total of it, can I call it as a gross value addition? That is the total value addition done in the economy. This is how GVA is calculated. Any difficulty? Let me know. Any difficulty so far? Shall we go forward? Why are we simply calculate at every step? My dear, you want to find out how much is the productivity of company A. You can simply take the number and run with it. But don't you want to find out how much is the total revenue generated by company A? Don't you want to find out how much is the total revenue generated by company B? So that you can also find out how much taxes they are paying. Is it the correct amount of tax or not? That is the precise reason. At every step, we are doing the accounting mechanism like this. At every step, we are holding them accountable. They will have to submit correct data to us. Okay? Done. So this is how gross value addition is calculated. Any doubt so far? Now, last set of concepts for you. Last set. After that, we'll put everything together and I'll show how GDP actual formula is used. What is this last set of concepts? If you remember just some time ago, I used two terms. One is taxation One set of term I used is taxation. Another set of term I used was subsidy. Correct? One was taxation, other one was subsidy. That is basically I said the taxes imposed by the government will increase the market prices. Subsidies given by the government will reduce the market prices. But let me introduce a much more complicated calculations here. Follow the discussion. Once you understand, it becomes very easy. Follow the discussion. Now, the taxes which are imposed and collected by the government are divided into two types. One is called as production tax. Second one is called as product tax. I repeat, the taxes imposed by the government are of two types. One is called as a production tax. Second one is called as a product tax. Second, subsidies are also divided into two types. One is called as a production subsidy. Second one is called as a product subsidy. Listen to this very carefully. Listen. Production. Production means either it is a tax imposed or subsidy given. This is independent. It is independent of quantity or units produced. I'll give you examples also. Understand this very carefully. Production subsidy, it is a subsidy given by the government, but it is independent of the quantity or units produced by the company. Production taxation, production tax, it is the tax which is imposed by the government and collected. It is independent of the units which are produced by the company. On the other side, whether it is a product tax or product subsidy, it is directly going to be dependent. It is going to be dependent on quantity or number of units produced. I will give you examples. Follow the discussion very carefully. So, product tax, number of units, it depends on that. Product subsidy, number of units, it is dependent upon that. Production tax, it is imposed and collected by the government, but it is independent. It is not at all connected to the units, number of units you are manufacturing. Production subsidy, government will give you that subsidy, but it is independent of how many units you are manufacturing. Can I give you examples one by one? Listen to this very carefully. Some time ago, I gave you example of FAME subsidy. Do you remember this? Some time ago, I gave you an example of FAME subsidy. Now, please tell me the amount of subsidy that you receive, is it connected with the number of units you are manufacturing or is it independent of units you are manufacturing? Think of it and let me know. The FAME subsidy that you are receiving, is it going to be dependent on number of, let's say, two-wheelers you will manufacture, or it is independent of two units the units you will manufacture? Some of you are saying independent. My dear, then where were you listening to? What were you listening to? For every one electric vehicle that you manufacture, in this example I'm saying, for every one unit of electric vehicle you have manufactured, government is giving you 8,000 rupees. Tell me now, for every one electric vehicle, government will give you 8,000 rupees. If you produce two electric vehicles, how much will you get? 16,000. If you produce a 10, you will get 80,000, assuming you're meeting conditions. I hope you understand. Assuming you're meeting conditions. If you don't meet condition, there is no question of subsidies only. So now, is it okay if I say, let me know at least now, is it okay if I say the amount of subsidy that you receive here is dependent on number of electric vehicles that you manufacture? Is the logic okay? The the number of electric cars that you manufacture, that will determine how much subsidy you will get. The number of two-wheeler electric vehicles that you manufacture, per electric vehicle, the government will give you subsidy. Can I call this as a subsidy which is connected, which is dependent on quantity of units you have manufactured? Any problem with this? Can I give this as an example of a subsidy where the amount of subsidy that you get is dependent on number of units you are manufacturing? Yes or no? Can I call this as a product subsidy? Let me know. Can I call this as a product subsidy? Product subsidy. Can I go forward here? The first one is clear with you. What about product tax? Government says you manufacture one remote control, you sell it in the market. Manufacture and sell it. For every one remote control, I will collect 5 rupee GST. Let me know. For every one remote control that you manufacture and sell, I will collect 5 rupee GST. Now you please tell me, the amount of tax that is imposed and collected by the government, is it connected? Is it dependent on the number of units or not? All of you understand this? Can I call GST as an example of product tax? Let me know. Can I call GST as an example of a product tax? So one, product subsidy, and the other one is product tax. And what is common between both of them? What is common? Whatever subsidy you will get, whatever taxes government will collect, both of them are dependent, are connected to the number of units you have produced and sold in the market. Done. That is a product subsidy and product tax. Next one is a production subsidy and production tax. I'll give a very simple example. Let me start with the production tax. Imagine you want to set up a manufacturing facility. Okay, you want to set up a factory to manufacture the remote control. You will purchase a land, correct? You will purchase land. And when you purchase a land, government will impose and collect taxes from you. This is called as stamp duty. I don't know how many of you have heard of this. Whenever you purchase a land, whenever you purchase a home, etc., government will impose and collect a tax which is called as a stamp duty. Now, please tell me, imagine you have paid a certain amount of stamp duty. Is it connected to the number of remote controls you are manufacturing? Let me know. Is it connected to the quantity of units you are producing? Some of you are saying yes. I don't know how. You are purchasing 2 hectares of land. So government will impose and collect stamp duties on you based on number of remote controls you are manufacturing. Absolutely no, my dear. How? How do you say yes? I don't understand. So based on the land, they will collect stamp duties. So can I say the stamp duty is nothing but a production tax? Any problem? Let me know. Stamp duty is nothing but a production tax. Can I go forward here? Can I go forward? And finally, production subsidy. Production subsidy. Imagine you're using electricity and the electricity cost is actually 4 rupees, but government, in order to promote manufacturing, government, in order to promote production in India, they will give you a subsidy of 1 rupee. Simple. You're purchasing electricity to manufacture, but government says take a subsidy of 1 rupee. Now, don't you think the electricity subsidy that you are getting, or a railway subsidy, because you're moving goods, right? The cost of movement could be much higher. Government will give you subsidy for transportation. The subsidy that I gave an example right now, railway subsidies, electricity subsidies, etc., if they simply give you subsidies like this, don't you think that is independent? of quantity of goods you have produced. Any problem? It is independent of units you have produced. Right? Can I call this as a production subsidy? Can I refer to this as a production subsidy? Answer is yes, by the way. So again, argument is simple here. Argument is very simple. Whenever subsidies are given to you, whether the subsidy is connected with number of production or how much production you are doing, or it is independent. If it is dependent on the units that you are producing, call it as product subsidy. If it is independent, call it as production subsidy. Same way in case of taxation. Government will impose and collect taxes from you. If the taxes are directly dependent on units, number of units, or number of products, then product taxes. If it is independent, production taxes. That is the differentiation. That is basically the differentiation between the two types of taxes as well as two types of subsidies. And in addition to this, the final concept before I tell you the GDP methodology or GDP formula, there is something called as basic price. Right? This is one of the prices that they calculate. There is something called as a basic price. Now, what is this idea of a basic price? Why should you calculate basic prices? Now, please tell me, imagine you are manufacturing this, right? Let's say the remote control. You are manufacturing the remote control. Please tell me, will you include production taxes, product taxes, production subsidies, as well as product subsidies in deciding the market prices or not? That's the reason some of you are asking me taxation, how it is counted, subsidies, how it is counted. This is how it should be counted. That is, you are a manufacturer. You will purchase a land. You will pay stamp duties on it. Don't you think whatever stamp duties you have paid, you should transfer the tax when you decide the market prices? You should include that stamp duties when you decide what is the market price of this remote control. Why? You have paid taxes to government. Those taxes, you should be collecting that from a consumer in the market. Because remember this very carefully. Whatever taxes are paid by the manufacturers related to production, simple idea, related to production, all the taxes they will include in the market price and they will collect those taxes from the customers. Does it make sense to you? Is there anybody in the classroom who says, sir, whatever taxes I will pay, let's say professional tax, I will pay import taxes, I will pay stamp duties to the government on the land that I've purchased to set up a manufacturing facility, I will pay it from my pocket. If your argument is this, my dear, you are incurring losses. Simple. You are incurring losses. Why? Any taxes that you have paid to manufacture this remote, who is going to use the remote? Tell me. Is the company using the remote or am I, the consumer, using the remote? So customers or the consumers will use the remote. So who should pay the taxes related to the remote? Customers should pay the taxes related to the remote. Does it make sense to you? That's the reason. Understand the logic now. Until very recently or until this formula was introduced, what we used to do was basically use cost price and calculate GDP. But now we should not use cost price. We should use market price. But how do we arrive at a market price? We'll start with the cost price and arrive at a market price. But in between, we'll be using many other expenditures, subsidies, taxes in order to account for everything and arrive at a market price. Any difficulty with any one of these, please do let me know. Any difficulty with any one of these, please do let me know so that I can repeat or will go forward. Whatever I've discussed, it is there in the slide. For example, production taxes, production subsidies, product taxes, and product subsidies. But if you look at the statements very carefully, Please look at the definition for production taxes and production subsidies. These are either paid or received. That is, the taxes are paid to the government, subsidies are received from the government, and are independent of volume of any goods produced. Did we discuss the same thing? Any difficulty? Did we not discuss the same thing? That is, whatever is the production tax, it is paid to the government, but that tax is not connected to the amount of production that we are doing or quantity of production. Production subsidy we will receive. That subsidy is not connected with quantity or the number of units that we have produced. Right? Same thing in context of product taxes and product subsidies. Right? Now we will use all of it. Right? Last part of the GDP methodology. Last part of the GDP methodology. So this is the basic price. Basic price is the amount receivable by the producer from the purchaser for a unit of good or a service produced as output minus any tax payable plus any subsidy receivable. Let me put it in the formula for you. Let me put it in the form of formula. The basic prices is equal to the factor cost, right? Is equal to factor cost plus production taxes minus production subsidies minus production subsidies. This is the basic price. Any difficulty, please do let me know. This is the basic price. So basic price represents what is the total value that the seller should receive after you account for the factor cost along with production taxes and production subsidies. That is called as a basic price. Any difficulty with the term basic prices? Any difficulty in terms of production taxes, production subsidies, product taxes, product subsidies? Please do let me know. Otherwise, I'll go to the last two steps. How do you put the formula? How do you remember? How do you simplify the formula? I will go to that. Any difficulty? Can I go forward? Sir, add subsidies minus taxes. Okay. Many of you will read the definition and you will tell me, sir, your formula that you have written is wrong. My dear, please understand. You can write the formula for basic prices in two different ways. I'll tell you why you people get confused. Right? I'll tell you. You can write the formula in two different ways. Let's say the market price of this remote control is 150 rupees. Agreed? Let's say the market price of the remote control is 150 rupees. Now, can I simply backtrack? Backtrack in the sense, can I move from the market price to cost prices? Can I do that? Can I go to the factor cost using the market prices? Of course, yes. From the market price, understand this carefully. From the market price, what I will do is, I will subtract indirect taxes. Correct? Any difficulty? I will subtract taxes and I will add the product subsidies. Right? Again, some of you might get confused here. I'll tell you what I'm doing. Factor cost plus taxes minus subsidies is equal to market price. Any problem with this? Let me know. Any problem with the formula? Now I know what is the market price. So using market price, can I calculate what is the factor cost? Of course, yes, I can do that. So what I'll do? I will transfer subsidies and taxes on the other side, which means now I can write factor cost is equal to market prices minus taxes plus subsidies. But please tell me, don't you think there are two types of taxes? Don't you think there are two types of subsidies? How do you account for all of it? How do you adjust for all of it? That's the reason this is the formula. This is the formula. Market price minus product taxes minus product taxes plus product subsidies plus product subsidies, right? This will give you the basic prices. This will give you the basic prices. Now read the formula and read the definition. You will see both are one and the same. Any difficulty here? Market price, from the market price I'm deducting product taxes and I'm adding product subsidies to arrive at basic prices. That is one way to arrive at basic prices. Another way to arrive at basic prices is I've started from the factor cost, I've added production taxes, I've subtracted production subsidies. That will also give me basic prices. Any difficulty? Before I go forward, any difficulty? I know some of you will find all these formulas very, very difficult because this is a first class. Don't worry. I hope you understand. Right? This is a first class. You're looking at these kind of calculations for the first time ever in your lifetime. Don't be afraid. It's like riding a bicycle or riding a cycle. Please go back to your childhood memories. Did you learn how to ride a cycle on the first day itself? No. You fell twice or thrice, right? You had to have certain injuries on your kneecap. Then you started to know, understand how to balance, how to ride the cycle. Same applied to economics, right? Automatically, some of you will feel concerned about all these calculations. Don't worry, calculate, revise, right? Repeat it more and more. Automatically, you'll understand what is happening. Okay, any problem with this? Give examples for basic prices, my dear. If I write numbers, that will give you basic prices. That's it. If a factor cost is 100 rupee, production tax is 10 rupee, and let's say production subsidy is 5 rupee. Right? Basically, how much is your basic price here? 105 rupees. That's how the basic price is calculated. Right? So this is basic price. And those who are asking what is the difference between basic price and the market price, my dear, please understand this carefully. I said we'll start with the factor cost. We'll go to the market price. Earlier, we simply added taxes, subtracted subsidies. But now government says when you talk about taxes, there are two types of taxes. Right? There are two types of taxes. What are the two types? The production as well as product. Whenever you calculate GDP, that is, you move from the factor cost to market price, most of the times we are focused only on the product taxes. Who is going to account for production tax? Who is going to count the production tax? Count it. And you received certain production subsidies. You will have to account even for production subsidies. Generally, you count only for product subsidies. So when you use the factor cost, adjust the factor cost with production tax, production subsidies, what you get is a basic price. And if you keep on asking me, define what is the basic price, this is what the government of India has given in the MOSPI document. There is a very small document published by government of India, and this is the definition given by the government of India itself. That is, it represents the amount that the manufacturer or the producer must receive from the purchaser after accounting for the subsidies as well as the taxes. That is a basic price. It is not the market price. I hope you understand. It is not the market price. Why? If you want to calculate market price, tell me, right? Don't you think in basic prices there is no product taxes here? In basic prices there is no product subsidies. So if you want to arrange them in, let's say, ascending or descending order, factor cost will be the lowest. After factor cost, the bigger one will be the basic prices, and the biggest will be the market prices. Any difficulty now? At least now, any difficulty? We'll start with the factor cost. We will use the factor cost to calculate basic prices, and we'll use the basic prices to calculate market prices. This is how the methodology has been prescribed by the government of India now. And finally, the two formulas. Can I go forward? Any difficulty even now? Please respond. Another half an hour is there. After that, done and dusted. After that, you're free, right? Absolutely free, right? I'm not going to trouble you after coming to your home also, right? So argument is simple here, right? You're using factor cost, you're moving to basic prices, and you are going to use basic prices to calculate market prices. That is exactly what I'm giving in the formula. But before I write the formula, it is already there in the slide. Before I write the formula, please tell me, if these are the companies, I'll go back to the same argument. If these are the three companies, company A selling to company B selling to company C, and company C will sell it to a buyer or a customer. Now, should I simply calculate factor cost for all the companies individually, or should I go with gross value addition or value addition at each of the stages? Please tell me, what should be my starting point? Can I simply take factor cost individually for all the companies and get the sum total, or right, factor cost, if you include factor cost at every stage, that will lead to double counting? Rather than that, I should adopt a model of value addition at each stages. Don't you think value addition will eliminate double counting in the system? That is basically the idea. Please have a look at the formula and tell me, does it make sense to you? This is a starting point. That is, I will start gross value addition. I'll calculate how much is the gross value addition at factor cost at every stage. I will adjust this gross value addition with production taxes and production subsidies. What I will get is GVA at basic prices. And once you have a GVA at basic prices, I will adjust this again with product taxes and product subsidies. What I will simply get is the GVA at market prices or GDP at market prices. And what you read in the newspaper is simply this. What you read in the newspaper is simply this. That is the GDP at market prices is the number that is given in the newspapers. Any difficulty here? Let me know. Any difficulty here? How do you start? From where do you start? Where do you arrive? So it is very confusing. My dear, it is not confusing. You are confusing every concept. That's the reason. Now let me simplify this. Imagine, okay, let's make it simple. Imagine this is the only product which is manufactured. Okay, imagine this is the only product which is manufactured in India. But is it okay if I say, to manufacture this remote control, this is a final good by the way, to manufacture this remote control, many companies would have manufactured intermediary goods. Let's say A will sell an intermediary good, let's say plastic, to company B. Company B will use the plastic to manufacture remote control and sell it in the market. Whatever the market price, don't worry. Now, how do we calculate GDP? If this is the only product manufactured and sold in India, only product, how do we calculate GDP? Through production method. We'll start at company A as well as company B. We'll calculate how much is the gross value addition done by company A. Is the point clear? Let me know. We'll calculate how much is the gross value addition done by company A. Now, I will also calculate how much is the gross value addition done by company B also. But please understand, if you want to calculate GDP, just gross value addition is not sufficient. Should you account for how much is the production tax here? Yes or no? How much is the production tax, right, paid by both companies A and B? Should we account for how much is the production subsidy received by both the companies A and B? Of course, yes. So GVA adjusted for production tax and production subsidies for both the companies. What you will get is basically GVA at basic prices. GVA at basic prices. Now, we have received GVA at basic prices. How much is the tax on this? Let's say GVA at basic price is 100 rupees. How much is the tax imposed on this one remote control? I will simply say, let's say a tax of 20 rupees. But government also says, if you manufacture and sell this one remote control, Government will give you a subsidy of, let's say, 8 rupees. So you will receive a subsidy of 8 rupees. So this is GV at basic prices. This is the product tax. This is a product subsidy. This is a product subsidy. What is the market price now? 100 plus 20, 120 minus 8, 112 rupees. This is the market price. This is nothing but the GDP value. Is it clear now? This is nothing but the GDP value. But again, this is my concern regarding the students who are asking numbers, numbers, numbers. UPSC is not going to ask you calculations. You don't trust me? Look at the question papers. Please go look at the question papers. UPSC will never ask you calculations. Right? What you need to understand is simple logic here. We cannot count the factor cost for all the companies. That should be very clear to you. Because if you simply count factor cost from all the companies, that will lead to double counting. So what we will do is, we will calculate gross value addition at company level. Now, I will adjust that with the production taxes or production subsidies. I know how much is the gross value addition totally for this remote control. That is, if you please go back to this number, how much is the gross value addition done by all the three companies here? Tell me now. How much is the gross value addition done by all the three companies? Right? 50 rupees. Now adjust this 50 rupees with the production taxes, production subsidies. You will get GVA at basic prices. Right? In that case, you add product taxes and subtract product subsidies. You will get market prices. That is how the GDP calculation is done. My recommendation to you people, do not complicate it more than this. You can download the document. Government of India has got a very small 100+ page document for this, not at all needed for UPSC. What you need to simply remember is this: the formula for GDP calculation. Let me prove it to you. This is what the question was asked by UPSC. Tell me now, can you write 250 words to answer this question? Look at the question and answer to me. Explain the difference between the computing methodology of India's GDP before the year 2015 and after the year 2015. And if you ask me, sir, in which year the question was asked, this was asked last year, 2022 UPSC mains. Please tell me, will you be able to write either in 150 words or 250 words the answer to this question? Don't you think, in fact, the biggest problem that you will face is how to write the answer in 150 words? Because if you have followed the discussion, I've told you the methodology for 1 hour now. I've spent around 1 hour to explain to you the methodology. And if you look at individual slides, in each of the slides, around 150 words are there. You are supposed to write all of it in 150 words, or let's say in 250 words. That's the reason I keep on telling you this. I will discuss, I will give you a lot of data. Do not complicate it much more than what is actually required. Because my argument is, pick up any book which is recommended for GS paper 3. None of the books will actually give you the GDP methodology. They will simply give you the three methods. The latest methodology is this, etc. And they will go forward. But just to make you understand the complexity of the issue, I have given you the calculation methodology as it is given by Government of India. And all of this calculation, it is not given in any of the books, not in even in NCERT. Very small data is given. In fact, this calculation methodology is given in IGNO material. Right now, don't download IGNO material and start reading. For GS paper 3, that is not needed. Done? Right, so this was the question which was asked last year in the UPSC mains regarding GDP methodology. And I'm pretty sure you will be able to answer the question easily in 150 words, if or even 250 words, if you have followed the discussion, even if you do not know how to write calculations. Even if you don't know how to write calculation, you can easily write 150 words, right? Or even 250 words. Done? Now, some of you are simply running behind one term here. Don't worry, we'll cover it later. There is a methodology called as IIP, Index of Industrial Production. I'll cover it under Industries chapter. Not today. under industries chapter. Okay, done. Okay, so next concept. This is the GDP methodology. Any difficulty now? Let me know. Any difficulty in the GDP methodology? This is the latest methodology, right? I've given you all the steps. This is my recommendation to you. Please revise it, right? I know some of you will find it very, very difficult. I know that, right? Because this is a new concept. You will get it, you will find it difficult, but please practice it once or twice. Automatically, you'll understand. Automatically, you'll know that, okay, you'll have to start from factor cost. But can you start from factor cost for every company? No, you will have to take GVA then. Now you adjust for production taxes and production subsidies, you will get basic prices. Take the basic prices, adjust for product taxes and product subsidies, you will get GDP at market prices. That's it. That's a basic idea. Practice it once or twice, automatically you will get the hang of it. Okay. Now, whenever you calculate GDP, some of the things are not included, these have to be excluded. What are the things? First one, the services provided by the housewives. Right? I'll give you the reason why. Generally, you must have seen, again, I'm not promoting it. You must have seen in Indian households, it is either right the mother or it is the spouse, that is wife, who will do lot of household work, be it cooking. Again, I'm not a promoter of it. Don't say, sir, you are a male chauvinist. You are promoting a very wrong thing, etc. Nothing. I'm telling you the fact, by the way. For example, after 8 o'clock, the class is over, or I'm pretty sure some of you, right, your parents, right, that is generally its mother. They would have brought a plate of, let's say, certain snacks, or they would have bought the dinner, kept in front of you, and gone. Which means the housewives are doing lot of work in the house. Please tell me, in any of the house, are we paying money for it? Let me know. Are we paying money for it? Otherwise, try it once today. Try it once. Imagine your mother will bring, let's say, a glass of tea and a plate of pakodas because it is raining nearby your house. You are listening to economic classes. You have a concerned look. Your mother is concerned about you. She will bring a plate of pakoda and a glass of tea, keep it in front of you. And by the time she turns around, you take out your purse, pay 100 rupees to her. Look at the reaction after that, right? The kind of scoldings you will get, the kind of beatings you will get, you will remember throughout your life. Which means, again, don't write all of this story in the exam. All I'm trying to tell you people is simple. Lot of work in the house is done by housewives. We do not pay money for it. And because we do not pay money for it, can we count it as a part of GDP calculation? That is not possible. Because we have not given any monetary value to that, will not be able to count it. That's the first one. Second one, black money. Now, many of you will ask me, sir, what do you mean by black money? Please do not understand the term black money. Black money is not black in color. Many of you will simply say black money means black in color. Black money is that money which is unaccounted source of this money is unknown, source is unknown, and taxes on this is not paid. Taxes not paid. Sir, what do you mean by this? Let me give a simple example. Imagine I'm a person who is involved in smuggling. Imagine, by the way. I'm not, by the way, right? But imagine I'm a person who is involved in smuggling, right? A smuggling of goods, a smuggling of gold, smuggling of, right, let's say medicines, whatever it is. And I've sold the goods and I've earned an income of 100 rupees. Now, please tell me, will I pay income taxes on this money? Will I become a good citizen now, walk into income tax office and say, please collect a 30 rupees income tax on this? They will ask me, sir, what is the source of income? And I'll say, I crossed the border illegally, brought certain ganja from Pakistan and I've sold it in India and I've earned 100 rupees. The income tax officer will say, thank you, sir. Please wait. They will put me in a room, call the police, and right, get me arrested. So argument is simple. One, the source of this money is not known for government of India until unless I say so. I hope you understand. When I say source is unknown, it is not for me. I know through what source I've generated this 100 rupee. I know, but government doesn't know it. Government doesn't know the source of it, right? So for the government, the source of this money is unknown, and taxes on this money is not paid. That is the reason this is called as right, basically black money. And some of you are saying, sir, is the black money always created through illegal sources? Not necessarily. Not necessarily. Black money can be created through legal sources as well, right? Black money can be created through legal sources. Don't ask me what are the legal sources, right? You will use that in real life, not needed. So black money, this is a black money. And please understand, black money is also known with another name, right? This is called as parallel economy. This is referred to as parallel economy. Now, what do you mean by parallel economy? Please tell me, if you are owner of a shop, you are having a shop. I will come to your shop. I will give you this 100 rupee. Will you be able to find whether this money is black money or white money? Tell me now. Can you find out, right, whether this 100 rupee is a black money or white money? Last couple of minutes, another 10 minutes, I'll close the discussion. Participate at least now. Be happy, right? Be happy because you know only 10 minutes are left out. Okay, now, right, will you be able to find out whether this 100 rupees is black money or white money? Absolutely no. Right? Some of you have become very diplomatic already. You're saying, sir, part of it is white, part of it is black. Now, if I ask you how much is white, how much is black, again, there is no answer. Some of you looking at me, you will simply say, sir, you look like a person who is created a black money. So I'll simply say black money. Answer is simple. There is no way for you to say whether this is white or black. No way. Absolutely no way to prove whether this is white or black. Right? Now, if it is white, can I use the 100 rupees to purchase goods from you? Yes. If it is black also, can I use the same 100 rupees to purchase goods from you? Yes. So now can I simply say white money and black money both can get circulated in the economy parallelly? Yes or no? The black money as well as white money both can get circulated. No way to distinguish between what is white and what is black. Hence, this is called as parallel economy. Any difficulty? Any difficulty in understanding what is black money, right? Why this is called as a parallel economy, etc. Now, please tell me, if a person has generated a black money as a part of income source, can you first and foremost find out how much is black money? No. Can you find out, right, whether should it be included, how much should it be included in the form of income when you're calculating GDP? That is also not possible. So that is the reason black money is not accounted when the GDP is calculated. Third one, transfer payment. What is this idea of a transfer payment? Understand the concept carefully. Whenever you come across the transfer payment means where money is transferred, where money is transferred without any exchange of goods and services. Money is transferred without any exchange of goods and services. Sir, what do you mean by this? I'll give a very simple example. Let me give a very simple example. Government will provide certain subsidy to you. Simple example, by the way. Government will provide certain subsidy. Let's say certain type of old age pension scheme has been introduced by the government. Old age pension scheme, not the normal pension, old age pension scheme. Let's say widow pension scheme has been introduced by the government. Please tell me, will the government accept any good or a service when they will provide welfare payment to the old people? Anybody who has seen it? Anybody says, yes, sir, they will do it? Absolutely no. It's a subsidy, by the way. You are a widow. Let's say monthly 500 rupees government will give to you. Do you think, are some of you are saying yes? No, my dear, you are wrong. I'm talking about welfare pension scheme. Welfare. For example, we have widow pension scheme. Government will give 500 rupees every month for a widow. Government will not collect any good or a service in return. They will not do that. Right? Now have a look at this. Is it okay if I say this widow pension scheme is nothing but it is a money transfer done by the government without any exchange of goods and services? In one hand, government will give money, right? From one hand, government will give money, right? How much is the money? Don't worry. Government will give the money to you, but in return, government will not collect any good nor ask you to provide any service. That is called as a transfer payment. Any difficulty? Any difficulty, please do let me know. That is called as a transfer payment. Now, why you should not include transfer payment in calculation of GDP? Reason is simple. This good, I will sell it in the market. In return, I will get market price of the good. Yes or no? Please do participate now. I will sell this good. Will I get the market price in the other hand? Of course, yes. I will sell, let's say, this product in the market. Right? It's a sanitizer, by the way. Will I collect money from the buyer? Yes. So there is an exchange. From one hand, I'm giving a good. In the other hand, I'm collecting money. But when you talk about transfer payment, is there any exchange of goods and services? I hope you understand. In return, will the government collect any good or a service from a beneficiary? Absolutely no. So what is the value of the good here? What is the value of the service here? Nothing. So it will also be excluded. Transfer payments are also excluded. Right? So these are simply transfers. Let's say government to the beneficiary. And in return, nothing is collected. So that is the reason transfer payments of such sort are not counted in GDP calculation. And finally, the last point for you people, the old goods which are resold in the market. Old goods which are resold in the market again, they will also be not counted. Why, sir? Why you should not count it? Let me give a very simple example. Imagine you will purchase a car in this year. Right? Let's say you will become IS officers, you will have a lot of money, you will purchase a car in this year, that is 2023. Now, when you have purchased the car in 2023, don't you think the value of the car is already counted in the GDP of 2023? All of you agree? The value of this is already counted in the GDP of 2023. Now, you will resell the car in 2024. Next year itself, you will resell it to somebody else. If I count the value of the car again, don't you think the car has been counted twice here? Already the car has been counted in 2023. If you resell it, again it is counted, then it will simply lead to double counting. That's a reason goods which are resold, the value of that is not counted. But let me ask you a very simple question. Right? I know somebody will be ready with this question by now. Imagine the reselling you have done through Car Dekho. Have you heard of this company? Car Dekho. There's a company by the name of Car Dekho. Right? This company has facilitated the sale and the Car Dekho will collect a certain amount of commission. Either it could be Car Dekho or it could be Maruti True Value, whatever it is. They will collect a certain amount of commission from you. Now, this commission on the sale of a second hand car in 2024, please tell me, will the commission be counted as a part of GDP or not? Will the commission be counted as a part of GDP? Understand, the commission will be counted as a part of GDP. I'll tell you why. Commission is right generated this year. And why are you paying commission? The company has provided services. Now, don't you think the Car Deco company has produced services? Services, mind you, car is a different product. They have provided the sales service to you in 2024. And because they are producing services, they are generating commission because of it. So, commission will be counted as a part of gross domestic product. right? So old goods which are resold, the value of the goods is not counted, but if there is any commission generated on the reselling value, that will be counted as a part of GDP, right? So these are some of the things that you will have to exclude when you're talking about gross domestic product. Now, any doubts that you people have, raise it, right? The discussion for the day is done. Okay, the discussion for the day is done, right? What is or any kind of a doubt that you people have, you can raise it now. We will address the doubts, then we can wind up the discussion for the day. Okay, any doubts? For understanding the basics of economics, of microeconomics, which we have studied early in the morning, from where I can cover, my recommendation is NCRT class 12th book, class 12th NCRT book, Introduction to Microeconomics. Here also, I will give you one very important point. Do not read a complete book. That is not at all required. Point number one. Point number two, lot of graphs are given, lot of calculations are given, not at all needed. Whatever concepts we have discussed in that, in this PPT, which is there in the PPT that is available to you, read only those concepts from that NCRT book. Nothing else is required, right? Most of it is unnecessary for UPSC. Okay, anything else? Sir, companies will update aggregate value addition data or market price. They will update whatever price at which they have sold in the market, right, at MCA database. Okay, anything else? Commission. Imagine, right? Imagine a company has used your car, resold it in the market in 2024, which means the company has provided services in 2024. They have generated services in 2024. And because they have created services, production of services, they will collect a commission from you. That commission will be counted as a part of GDP. The value of the car, that will not be counted as a part of GDP. Okay. What is the task up to next week? The recommendation from my side is very simple. Read newspapers. Do not skip newspapers. Please keep on reading newspapers. Update your current affairs. What I expect from you is very simple. That's the only thing. Read newspapers every day, every day, every day. Right? Don't skip, read newspapers. Okay. Anything else? Anybody has any kind of a doubt? Please do let me know now. If person teaching as a private teacher in school and coaching, then is that money black money? Generally, no. If understand this carefully, if the person is a government teacher, and as per the law, government teacher is not supposed to hold private tuitions, then that will be counted as unaccounted money. Okay, anything else? Please do let me know. Otherwise, we can stop the discussion. Any other questions? Current affairs from which month? My recommendation is 1 year. 1 year, right? 1 year in the sense, if you're going to write exams in the May 2024, start from May 2023. That's it. Okay. Is Tamil Nadu state book good for study for base of economics? Of course, yes. That is also good. If you want to use it, use it. Again, please understand. NCRT is a standard one. Either use NCRT or use Tamil Nadu, the 10th, I'm sorry, 11th and 12th board books. Those are also very good books. Which newspaper is good? There is no universal answer to that, right? There are multiple newspapers. I don't want to market any newspaper. You pick up any one business newspaper. I'll tell you the list. Business Line is there, Business Standard is there, Mint is there, right? In addition to that, if you want to read Indian Express, explained column in the Indian Express, right? The Financial Express is there. So these are the different newspapers. You pick up any one newspaper. Okay. Give solution to reduce black money. Again, there are a lot of reforms. Don't worry about it now. Okay. Anything else? Anything else? Please do let me know. Nothing. Nobody wants to ask me question now. Done then. If anybody wants to make a call and ask a question, it is also available. How much tax collected for 1 rupee? My dear, the amount of tax collected is very, very high. We'll discuss. I'll show you the data. Please don't worry. I'll show you the data. When I take a fiscal policy, taxation as a chapter, when I discuss, I'll show you how much government will collect taxes. Okay, nothing else. Any other question? Any other question? So from where practice questions will come? You can use the previous year questions. You can use the test series questions. You can use weekly questions that we provide. There's so many sources that you can use the questions from. Okay, done then. Okay, done. Let's stop the discussion today here. We'll continue with the discussion next week. When I start, I'll start with gross national product. And I expect you people to revise, read static book, revise either Tamil Nadu book, NCRT book, use the sources as per your requirement. I expect you to revise. Next week, when I say GDP, if somebody says what is GDP, it is a clear indication to me that you are not revising. Next week, I'll say the demand for the product is inelastic. Somebody will say, sir, what do you mean by inelastic product? Clear indication that you people are not reading, right? So don't do that. And use the classes to maximum benefit. Please read, revise, update the current affairs. Done. So that's it from my side for today. Let's meet tomorrow. I'm sorry, let's meet next week, not tomorrow. My mistake. Let's meet next week again. See you on Saturday. Take care. Bye. Good night.